This is a Japanese candlestick. It shows you the open, close, high, and low of an asset over a set time period. But if we peel back the layers just a little, you'll find something more subtle and powerful hiding within. And it's not volume. It's a measure of how efficiently price moved within the candle, derived entirely from lower time frame price action. In this video, we're introducing an indicator that redefines how we evaluate candlestick strength. By the end, you'll know how it works, how to get it, and how it can sharpen your trading edge. So let's get right into it. Unlike traditional tools that rely on volume alone to determine strength, using tools such as footprint charts, volume profiles, or volume-weighted moving averages to name a few, this indicator takes a different route. Instead, it slices each candle into smaller rows, and then using the lower time frame opens and closes, it analyzes how efficiently prices moved within that area. Then it aggregates those movements readings to assign a bullish or bearish efficiency score as a percentage right on the candle. Let's take a closer look. When you apply the indicator to your chart, you'll notice each candle is overlaid with a segmented bar, stacked row by row. These rows shift in color along a green to red gradient, and each one displays a percentage. But these percentages aren't just decorative. They're calculated from lower time frame price action, specifically how the price opened and closed within each slice of the candle. A row showing 0% signals strong bearish movement in that segment, while 100% reflects highly bullish activity. The result is a clear, visual breakdown of candle strength from lower time frame to higher time frame. Opening the indicator settings, you'll notice it's intentionally kept simple, with just two main controls: time frame and row size. Time frame lets you choose the lower time frame data used to calculate each candle's strength. By default, it's set to 1-minute intervals. The lower the time frame, the more granular and accurate the price action analysis becomes. Row size determines the vertical resolution of each candle's strength bar. A smaller row size increases the number of segments per candle, offering a more detailed, layered view of price efficiency. But note, if you adjust the row size manually, make sure to disable the auto option to apply your custom settings. Because of the way this indicator overlays on your chart, some users may find it visually cluttered, especially when combined with the default candlesticks. If you're having trouble seeing the indicator clearly, one simple solution is to hide the main candlesticks. To do this, open the Object Tree panel in Trading View, locate your primary candle layer, and click the eye icon to toggle its visibility. This can help the candle strength bars stand out, giving you a cleaner, more focused view of the data. Now that we understand how this indicator works, and what its readings actually mean, the real question is, how do you use it in your trading? To answer that, let's walk through a few real-world examples and see how this tool can help you read the market with more precision. The most important element to focus on with this indicator is the percentage rating within each row. Percent indicate dominant bullish momentum. With this in mind, we can use the indicator to pinpoint areas on the chart where price action is becoming heavily one-sided, especially around key swing points. Take this example. We're looking at the US 30 on the 30-minute time frame. A swing high has just formed, but notice what happens at the top of the candle. Multiple rows are rated 0%. That's our first signal. Bearish pressure is building. Then, the very next candle also prints with several 0% rows stacked throughout. This double confirmation suggests that sellers are gaining control, and a reversal from the highs is likely. In this case, a trade setup could be entering short at the close of the second candle, placing your stop just above the swing high, targeting either the next swing low or a 1.3 risk to reward level. This indicator also shines when used as a confluence tool. Because it updates in real time, it's ideal for spotting shifts in momentum as they happen. In this example, we're looking at Tesla on the 1-hour time frame, using the Smart Trail feature from our Signals and Overlays toolkit. The Smart Trail is a dynamic band that expands and contracts with volatility, often acting as a support or resistance zone where price reacts. Here we see price dipping into the Smart Trail zone, but we don't jump in just yet. Instead, we wait for confirmation, specifically the formation of 3 or more bullish rows with high percentage ratings. That's our signal that buyers are stepping in. Once confirmed, we can enter the trade with stops placed just below the Smart Trail, allowing for a potential bounce and target a 1.3 risk to reward. Key reminder, one strong row isn't enough. You want multiple stacked bullish rows to validate the setup and increase the probability of success. And that's the internal candle strength indicator, an innovative way to visualize